All right, we are gone. What is up, everyone? Today we are going to be going over day 3 of the strategy. Today is going to be going over the entry function, the last step, and then also covering the change in the state and delivery, which is the entry function that I use on the 1 minute time frame. Yeah, today is the last strategy video. It's only a 3-step model that I follow. So today is probably the second most important day as to day 2. Day 1 was super extremely simple, and then today is going to be something that you really need to understand. So we will basically go over the basics of what the CISD is. I explained that a little bit in video 2, but we'll go over multiple examples on the 1 minute time frame. We'll also go over SMTs and as well as stop hunts, which are required for changing the state and delivery. So what we can do is we will just replay price action. This was a trade that I ended up taking yesterday. So we'll go through the whole thing since you guys already know the first 2 steps. Obviously, on this day I was bullish because we ended up closing above 2 a.m. candle high right here. And then when we scale down, we have our 10 a.m. opening price right here. And then we created an SMT. Okay, so this is the first step that we'll go over today. So we created this SMT with ES right here. Okay, as you can see, ES tapped into this 15-minute fair value gap below 10 a.m. opening price. So whenever we end up having a SMT, that means that NASDAQ has a protected low right here. Okay, so NASDAQ does not need to come fill this 15-minute fair value gap because ES has already taken out that low. So from there, I noticed that we had this SMT right here. It was exactly like this. So I know that this 1018 low right here is going to be protected. I know that my stop loss is going to be safe here. And then this is where I end up looking for a long. So for those who don't know that much about changing the state and delivery, it is basically whenever we have down close candles or up close candles in a bear scenario. But since we were bullish in this case, we would use the last consecutive or single down close candles to this stop hunt. So since there's an SMT here, we do not need, the NASDAQ does not need to go down to this low, and it's also called a turtle soup, but I just called it a stop hunt right here. So since we created this SMT, this low is safe, and then all we wait for is a candle closure above these consecutive down close candles, and we end up getting it right here. This is where I go long right here. Stop loss is always going to be at the protected low, and then I target a 1-to-1 risk reward. And we ended up hitting TP right within about 7 minutes, I believe. Yeah. So that's how you put all the pieces together right there in the first example. That was, this one can be a little tricky. We'll go over one where there's like an actual stop hunt instead of the SMT protecting the swing low. So this was the SMT, right? ES ended up coming lower, taking out this swing low right here. So ES created the stop hunt for NASDAQ, and we were able to start to look for closures above these last 2 down close candles, which we got here at 1021. So that was the first example. That's us putting all the pieces of the puzzle together, which is only 3 steps: bias, point of interest, and then entry function. So this was entry function, point of interest, and bias was created down here. And then we can go to the day before, which was also a winning trade. this week has been very good. Uh, Super clean price action. We're delivering, we're expanding lower, expanding higher, and we've been delivering out of these 15-minute gaps, which have been extremely easy to trade, um, especially with the way that I look at the market. So this was on Wednesday. I ended up taking a short, and this was delivering from an order block, which I went over in the trade recap that I made over this trade. But we can go over this again for you guys. So 6 a.m. candle ends up closing below this 2 a.m. candle low. So from there, I have a bearish bias. And then for our point of interest, we end up creating this 4-hour order block. So when 10 a.m. opens, we can use this 4-hour order block, these two up close candles, as a area where we can expect 10 a.m. to manipulate into and then distribute lower. So this was a bearish order block. We can mark this out. Okay. And once we got up into that area, we looked for shorts. So you could see price ends up coming higher, manipulates into the 4-hour order block, and then this is where we can go over stop hunts. So whenever there's not an SMT with a certain swing high or swing low, we just mark it out as a turtle soup or stop hunt, liquidity sweep, whatever you want to end up calling it. This ends up being your stop hunt right here of a swing high. And we create a change of state like this right here. We take out the swing high, and then we close down below this opening price right here, which creates a bearish change in the state in delivery, which we get right here. So these were the last two up close candles in the range after the stop hunt. So this is where we would look for this candle to come down and close below 10.04 opening price. So I ended up going short right here. Stop loss at the swing high, targeting a 1-to-1 risk reward about right here. And then this one also plays out perfectly. So you can always mark out your stop hunt just like this. I always just typically do a line right here. I don't know why it keeps doing this. I have to zoom in. And then I just mark it out like this and put some money signs like that. Liquidity sweep. Okay. So this is typically how I'd mark it out right here. So mark out the opening price that we need to close below, and then mark out your swing high to the left where we end up creating the turtle soup or the stop hunt. Either one works. So yeah, this is how you use the stop hunt. This is how you use this change in the state and delivery whenever we are delivering from a point of interest. So we'll go over one more example. Typically, we won't have an SMT protecting the low or the high. It'll typically be something like this where we'll have an internal sweep of liquidity and then we'll reverse and close below, creating a CISD. So we'll go over one more example for you guys before we get off here. And we'll go back to Tuesday. I ended up taking no trade, so we have to go back to the previous week. This is Monday. We ended up just falling straight down. Here, we'll go back here. Okay. In this case, this was using an SMT right here. But starting out on the 4-hour, we ended up having a bearish bias closing below 2 a.m. candle low right here. Bearish bias. And then we had an SMT right here. Yeah. We ended up creating an SMT going above this 945 candle which there was a fair value gap right here. So there was an SMT right here above this 945 candle on the 1 minute. It looked like this. So, and then we also did have an internal sweep right here of liquidity, which you could have marked out as well. But since we have this SMT here protecting this high right here, we did not need this turtle soup right here, but we ended up getting it, which is also something that's, you know, it just adds more confluence to the trade, is what I'm trying to say. So when we ended up having this SMT protecting this 15-minute gap right here, we scaled down to the lower time frame, and then we could look for our CISD, which we ended up getting right here. This is a bearish scenario. So whenever we're in a bearish trade, we want to look for the up close candles to be closed below. So I ended up taking a short right here, or I didn't end up taking this trade actually, but hindsight, probably should have ended up taking this trade, but it's all good. So, and this one, yep, gets hit right here. So we ended up having SMT here protecting this 15-minute gap, and then we also had an internal sweep of liquidity, which just basically adds confluence to the trade. And then we ended up creating a bearish change in the state and delivery right here. That's where I enter. And yeah, super simple. As long as you understand swing highs, swing lows, and change the state and delivery, all you need to do is just put the 3 pieces together, and that you basically have a winning strategy right there. Simple as that. And that's pretty much it for the strategy playlist. I'm also going to be going over the super basics like fair value gaps, candle structures, risk management, stop hunts, like all individual videos just for the next series that I'm going to be doing. So stay tuned for that. But yeah, this was just super simplified, just going over my strategy, putting it all together. I wanted to make 3 videos on that, and then I'll dive into the super basic stuff. But yeah, that's pretty much it. Going over these 3 examples. Thank you guys for watching. I hope you guys have a great rest of your night, and thank you guys.